Every single day, the world is just humming with signals. Today, we're going to decode what a huge airline merger, a new push into AI shopping, and a social media crackdown in Australia are telling us about where the global economy is headed. Let's get into it. And I mean, to put this into perspective, in just the last 24 hours, our feed picked up 977 distinct signals from over 70 countries. It is an absolute fire hose of information. So, how on earth do you make sense of it all? Well, we start by breaking it down. Now, what's really fascinating here is that while news is obviously the biggest slice of the pie, the real stories, they're often hiding in those smaller categories. Like a single M&A deal can tell you so much more about an industry's future than 1,000 headlines. And that's exactly where we're going to focus today. All right, so let's pull on a few of those threads and really decode the most important stories that bubbled up from the feed. First up, a massive shakeup in the U.S. travel world. Allegiant and Sun Country, two big-time leisure airlines, are merging. I mean, this is a classic consolidation play, right? It's driven by razor-thin margins, crazy competition for travelers on a budget, and, of course, the soaring cost of fuel and labor. And make no mistake, this is not a small deal. We're talking about a combination valued at a cool $1.5 billion in cash and stock. That's a serious financial commitment. But what does it mean for you, the traveler? Well, this new combined airline is going to serve a staggering 22 million customers a year. That gives it some serious pricing power and a huge slice of the budget travel market. And when you put their fleets together, you're looking at 195 aircraft. This new entity becomes an absolute powerhouse in leisure travel, which could, down the line, mean less competition and maybe even higher ticket prices on some key routes. So while airlines are consolidating in the physical world, a very similar power play is happening online. Google is making a huge push to own the future of shopping with a new AI-powered commerce platform. Think about it. Just like they control the flow of information with their search engine, they now want to control the pipes of e-commerce itself. They're using AI to connect buyers and sellers in a way that could totally sideline traditional retailers. Meanwhile, over in the world of self-driving cars, we're seeing a bit of a recalibration. Motional, a key player, just announced a reboot of its robo-taxi plans, putting AI right at the heart of everything. And they're not messing around. They've set a new firm target, launching a driverless service in Las Vegas before the end of 2026. It just goes to show you, while the timelines might be shifting, the commitment to an AI-driven future for transportation is as real as ever. Of course, not every signal is about growth. The feed also flags rising risk. Today, we're seeing a clear trend of governments trying to control the flow of information and policy. You've got Malaysia and Indonesia blocking an AI tool, and at the same time, major concerns swirling about the independence of the U.S. central bank. You couple that with geopolitical tensions in the Middle East, and you've got a really complex, uncertain environment for global markets. Okay, so with all of that going on, where is the money actually moving? Let's follow the capital, from the biggest boardrooms all the way down to the factory floor. And it really doesn't get much bigger than this, a potential $280 billion mega merger between mining giants Rio Tinto and Glencore. Now, this isn't just about getting bigger. This is about controlling the supply of critical minerals, the lifeblood of the entire green energy transition. The winner of this deal could literally hold the keys to the future of electric cars, batteries, and all that renewable energy infrastructure. But while those mega mergers grab all the headlines, the real pulse of the economy, you find it in the smaller, everyday stuff. This is just a sample of today's U.S. government procurement contracts. It's not glamorous, I know, but these are the essential parts, the nuts and bolts that keep the country's industrial machinery running. This is the real economy in action. And this idea of focusing on the fundamentals, on the plumbing, it's also playing out big time in the tech world. This quote right here perfectly captures the mood in crypto investing. The hyper on consumer apps might have cooled off, but the smart money is flowing into the essential infrastructure. And here's the proof. A company called Rain, which builds that foundational plumbing for the crypto economy, just raised $250 million. This shows that even in a so-called crypto winter, investors are still betting big on the underlying tech that's going to power the next wave of digital finance. All right, our third big theme for today, and this is one that impacts every single industry we've talked about so far, the growing web of rules and the very real cost of having to follow them. Check out this number.
In Australia, because of new laws designed to protect kids online, Meta was forced to shut down 500,000 children's accounts. That is a powerful example of how governments are starting to flex their regulatory muscles against big tech.
And this really gets to the heart of it. It's not just a statistic, it's the real, tangible, operational cost of new digital regulations. For global companies like Meta, just trying to navigate this complex, constantly changing patchwork of rules is becoming a massive challenge and a huge drain on their resources. And this pressure to set new rules is happening everywhere you look. In the US, lawmakers are trying once again to define the legal framework for crypto, and in a completely different context, we're even seeing signals of potential governance shifts in Gaza, which will create new rules and risks for that region. The common thread here is that the old way of doing things is being challenged and redefined across the board. Okay, we've covered a lot of ground: mergers, AI, procurement, regulation. So let's just take a step back and connect these signals into the key takeaways for today. So, what's the big picture? Three key themes really jumped out from today's signals. First off, the big are getting bigger. From airlines to mining, we are seeing a major wave of consolidation as companies try to control costs and their supply chains. Second, AI isn't some futuristic buzzword anymore. It's being woven right into the fabric of our economy, from how we shop to how we get around. And finally, governments are stepping in a big way, creating a new era of regulatory friction that companies like Meta are already feeling the heat from. So when you put it all together, today's signals paint a picture of a world that is consolidating, automating, and regulating, all at a furious pace. These three forces are fundamentally shaping our future. So the real question is, what signals are you going to be watching for tomorrow?